Hey guys, this is Wave 618 and it's the 22nd of August 2018, just approaching 4:15 in the afternoon BST. Okay, so we're long due an update in Bitcoin and there's a few things I want to discuss in this video. So most importantly, I want to discuss what I believe could play out to be the most important line that we will see in crypto history. So that's a line that we're going to draw on the Bitcoin chart. And it's going to be a line that when price crosses it, I can't see it turning back on itself for a very, very long time. So it's a brilliant opportunity really to get in on this Bitcoin market. Now, a lot of us have obviously got questions about how far will Bitcoin come down. When it does come down, will it bounce? Will it go sideways? And they ask this quite understandably because they don't want to miss out on any move. So we're going to go into that. We're going to talk about this line that I believe will be very significant. We're going to be using both Elliott wave and pitchforks to really establish where that line lies. Now, before we go into that and just and talk about the chart in general, we will at the end talk about what price is doing on the shorter time frames, what it did last night, and where it's likely to go in the short term over the next few days. But yeah, just before we go into that, I do want to just mention quite a new, exciting development that I've set up, paired up with another trader. So Financial Freedom, this is his website here, financialfreedom007.com, and you can see in the menu at the top there's various things that he is showing through his website, but it's this newsletter here which is the new development. So what we're going to be doing on a weekly basis, we're going to be essentially producing a newsletter. So here it tells you a little bit about it, but essentially we're going to be covering Bitcoin, crypto, as well as other markets. So we feel that the market is generally, or traders in general, are starting to get a greater interest in various other markets and not just crypto. So for that reason, we're going to cover all the major markets, whether it be gold, the stock indexes, it could be the bond market, it could be forex pairs, anything that's showing a nice setup and is of particular interest we'll be covering. I believe it's important to venture out and be open to trading other markets, just because you don't always have opportunities in one market. As we've seen in Bitcoin, price has really gone, if we just pull up the Bitcoin chart, price has really gone sideways and it's been back and forth for quite a while. It's not really trended so much. And so there's often larger and better opportunities available in other markets. So for that reason, we are going to cover other asset classes as well as Bitcoin and crypto. But yeah, as well as that, within the newsletter, we are going to have an educational section. The idea is that we're teaching you guys to become independent traders yourselves, and just by reading our analysis and forecast for the upcoming week, you will be learning at the same time. So the idea is that you'll be learning from this, as well as getting ideas on what to expect and an explanation for what has happened in the market so far. So yeah, that's going to come out on a weekly basis. So really hope you will join, and it's going to be a weekly subscription service. So there's an option for you to sign up whether you're UK and EU, or if you're the rest of the world, then you click here to sign up. Alright, I won't dwell on that too much here. I want to really go into the Bitcoin chart here. So first of all, if you've been watching my videos, you'll know that we've been talking about Bitcoin coming down in this WXY fashion. So I had changed my count several times with regards to what was happening here. So previously I was talking about this being a WXYX, and then this is Z. Now I believe that this is set up very nicely to be a triangle, and I will pay reference to the 2014 chart also, which also demonstrates this triangle. So there is a lot of resemblance between what's happening now with price and what happened in 2014. So we will be looking at that as well. Now this is of particular significance, this triangle setup, because it helps us project where price will come down to here. So I have suggested that the Y wave will be a 0.382 fib extension of wave W. So if that's our wave W, extending that from where Y will start, which is here at the end of the X wave, the 0.382 extension is around 3,200. So this is a rough estimate as to where price will come down. Now there will be a lot of support around the 4,300 level. Reason for that is because that is the 78.6 retracement of the major move up to $20,000. So yeah, it'll be interesting to look at where price is around there. And from that point, there is very little interest in selling at that point because, as I say, price could go sideways a bit. It may not come down further than the 4,300. So once it reaches that level, I wouldn't get too greedy and try to short further. Now, a little bit of explanation about this triangle. So we can see our flat base here, and then you can see the descending top, so lower highs going along. Now a lot of people will say, hang on, this doesn't look exactly like the textbooks because this wave, if that's our A, B, C, D, E, so our B wave isn't quite reaching this bottom line. But we don't always have to see our patterns being played out exactly as we see them in the textbooks. So the rule is with triangles that both sides of the triangle need to be hit twice. So that has happened here, and we will pay reference to 2014 where that's happened also. So yeah, that's the triangle right there, and that's why it's important to know where the triangle finishes, which is here, so that we can project where price is likely to come down to. So as I said, that 3,200 level there. So yeah, let's just have a quick look at 2014. So here, I'll show you the triangle that happened here. It's certainly not as clean as the triangle that is currently happening. So this was our wave W, and you can see it doesn't quite reach where the base of the triangle is. If I just label the triangle for you, so this will be A, B, C, D, E. Okay, so it's not clean because this point doesn't quite hit the triangle, and this point actually goes through it. But again, you've got both borders of the triangle being hit at least twice. So here, 1, 2, 3, and here 1, 2 hits of the base. So it's still valid for a triangle setup there. And why is that interesting? So if we just delete that, and that's interesting because if we look at the length of W and do a fib extension from where that triangle finished, which was here, we can see, if we just bring that up a little bit, it was this 0.382 fib extension that got hit at the 159 level. So that is why that was my estimated target, is that 0.382 fib extension of the wave W, which would have brought us down to 3,200 with our current price. So let's just clean that up. Now, this is all important for how I'm going to show you this really important line in crypto history that I've been talking about. Now, a little bit about pitchforks. So if you've watched my videos recently, you'll notice that I've spoken a lot about pitchforks. You'll see on Twitter I've also spoken about them. Now, what you generally do with pitchforks is you draw your 3 pivots. So first pivot would be here. Second pivot is at the end of the first wave, which is the W, which would end here. And then your third and final pivot is where your second wave finishes, which is this X wave, which would finish here. So this is interesting. So I have prepared a pitchfork for that. So let's just draw that on here. So in fact, I've already done it to save time because they are a bit fiddly to set up in the first place. So let me just find out. So it's not that one, not that one, but it's that one. So this is a Schiff pitchfork. So the main pitchforks that I use are Schiff and the original Andrews pitchfork. And the Schiff pitchfork generally has a more gentle gradient to it. And so, yeah, this is our Schiff pitchfork. Now, first of all, I'm going to explain where I think price could come down to with this pitchfork. But I'm also going to show you what happened with this same pitchfork in 2014. So first of all, I can't see price coming above this line. This line will act as resistance. Yeah. Now price could easily turn over from here, and certainly it's not going to come above here because this was the end out of our X wave. So price isn't going to come above here. It could retrace, and if it does retrace, the maximum it's going to come up to is this line here. And we'll go into this on the shorter time frames later. But the next fib, so it's hit the 38.2 retracement up to here. The next fib I think is around, I think 7100. I think that's the 50% fib. So that could potentially get hit, or it could just roll over. But we'll come on to that later. What I really want to say in this at this point is that I believe that price, when it does break this line, it's going to go through this median line because it's going to break down quite rapidly, and it could easily test this lower median line. Reason I say that, let's go and have a look at the 2014 chart. So again, we're going to apply our pitchfork. So this was wave W. So let me change these labels here. So it should look like this. So this is our W. Then we have our triangle, which was A, B, C, D, E. And then so that big triangle was our X wave, and then Y wave was this final move down. Now let me just show you, let's bring up the pitchfork for that. So I believe it's, okay, not that one. Just bring it across. Here we go. Okay. So this is our pitchfork here. So you can see first pivot at the beginning of W, second pivot at the end of W, and third pivot is at the end of the X wave. Okay. Now what did price do? It came all the way down here. It went through the median line, and it was very, very close to this lower median line. And look how rapidly it sold off. Yeah. This could potentially happen again, because when this support line breaks, this base of the triangle, it's going to break. Price will break very rapidly. You can see here it came down, small retest, and then really big sell-off. This is panic selling right here. Yeah, this because a lot of people will have their stops under this level, just like in current price, people have their stops under the 5900 level. And as soon as those stops get taken out, price will fall very quickly. Now, yeah, so price hit here, and then it started to trend upwards. Now, the most important line that I believe is this line here, this dotted line. What this dotted line represents is that this, essentially what a pitchfork tells you is it tells you about the trend. So it tells you that the trend is essentially downwards here. And once this warning line breaks, that means the downtrend is broken. And you can see here that once this dotted line got broken, price, look at the volume as well. It's a little bit faint on my chart, I know, but there was a big spike in volume at this point that it broke out of this warning line. It broke out, retested it perfectly, and you can see price never looked back until it reached $20,000. So from 300 to 20,000. I'm not even going to try and work out the risk reward on that, but this is why I believe it's so significant. And when it happens this next time, if it does play out the way I'm saying is, then we have another opportunity to look at this line here. A lot of people obviously think, oh, I need to get in here. Or they might see this initial impulse, sideways action, and then say this is a reasonable place to get in. Yes, it is, that's reasonable, but you could also look at this. This is a very good place to tell that the downward trend is over when this warning line gets broken. Yeah, I will at some point be doing a tutorial on pitchforks to explain a little bit about the significance of all these lines. But this warning line, this dotted line, which is two standard deviations away from this thick red line, which is the median line, it's when this line breaks that you really get the change or the break in trend. So let's have a look at where this line is now. So as soon as this dotted line breaks, that will mark the end of this bearish market. That will be confirmation of it. So I do believe that price could come down low, probably to around $3,000. Then we'll form a little bit of a spike, maybe up to 4,300, bit of sideways movement, and then slowly move up. And then it's when it breaks this dotted line, that'll be a wonderful place to place a trade. That's certainly what I'll be looking out for, because the risk reward will be absolutely epic. So obviously that's if it all does play out the way I'm looking at it. So if it doesn't, then we'll adjust all of this. But right now it's all playing out the way I'm forecasting it. So yeah, let's see. We need to see if this line holds first of all, and the price goes down below 5,900 before obviously going above here. But I am confident that that will happen. So this is the line, the most important line in crypto history, because Bitcoin, what happens in Bitcoin essentially determines what happens in the rest of the rest of crypto. So yeah, so that's what we'll be looking out for. Now, okay, so we've touched on that. Now we could just dwell a little bit on what is happening at present. So let's just zoom in a little bit. So this was the end of our X wave, and then we're seeing Y play out. We've seen a move down. It's now retracing a bit. Now it's hit very nicely at the 38.2% fib, but I'm just going to demonstrate to you here. If we just go on let's go on the hourly chart. I'm just going to show you another example of how pitchforks work very nicely, especially when you use a combination of pitchforks and Elliott wave. So just got another pitchfork I'd like to bring up here. Not that one. So this is the one I'd like to talk about. Whilst we're talking about that, let's just take off our other one on the larger degree. So alright, let's see which one it is. Alright, can't find it right now, so let's not worry about that. So as I say, price retraced. This is our high to low, retraced to 38.2. It also hit this upper median line. And how did I draw this pitchfork? So as I mentioned with a pitchfork, you need your first two waves. So this was our first wave, and this was our second wave. Now, an understanding of Elliott wave is required, because a lot of people might say this was the end of our second wave. But in fact, you'll be able to see that this has all been a 3 waves down, or in fact 3 waves down, 3 waves up, 3 waves down. So it's been a WXY in itself. So this looks like an A wave, A, B, C. Now the question is, has this finished? It's come down to this point. Why did it come down to that point? Because this is very good horizontal support here. Why? Because there's two very good, this horizontal line acted as good resistance here and here. So now it's acting, sorry, here and here also. So now it's acting as good support. So that's quite understandable. It will take a lot of energy to break this line, especially considering we're at the median line as well, which will also act as support. So the question is, will it make another high? That's one possibility. As I say though, if we zoom out, this median line here, this upper median line, I cannot see price going above this. Cannot see it. So if it is to come up, let's say it's going to hit the next fib level, it could hit the 50% fib at almost 7,200. That's a possibility. Could it come up to the 61.8? Yes, it could, but it needs to do it pretty quick, and it's already moved quite impulsively, so I'm not sure it will have the energy to do that. But anything's possible. Now, so if you are going to short, I think it's relatively reasonable to put on a short position now, but the stop will have to be quite wide. above this 61.8 here, so above the 7,500. And certainly depending on what price action does, so as soon as we break this 6,600 level, you could tighten your stop and potentially bring it to just above this high here. Yeah, so you might want to be patient. You might certainly I'll be looking to wait for this line to break before perhaps going short. I didn't manage to catch the top here. Reason being, it was at 3 o'clock in the morning my time, so I was fast asleep. But it would have been a lovely trade just because of that confluence. It hit the upper median line and it also retraced the 38.2% fib. So I found that it's a very powerful indicator. So a combination of Elliott wave, or not Elliott wave, but Fibonacci and pitchforks. So very good combination, especially at times of catalysts. So yeah, that combination is lethal. So yeah, we'll have to see how price plays out. The key levels is this 6,600 level. Yeah, so we'll see if price comes down lower than that. And if it does, then potentially this short could be placed with a stop just above here. But until that happens, if you are short, I would have a stop above around 7,500. So yeah, I hope that explains that on that shorter time degree. But yeah, the reason for this video was really just to dwell on this line, which I believe is of particular significance. When price breaks it, you can see when it broke it last time, shot up, and it's a very safe place to buy in. So do not panic. Do not panic if you miss the bottom. A lot of people lose a lot of money trying to catch the bottom. That's not the best way to trade. Okay? A lot of people keep asking, what level is it going to go to? What month is it going to happen? Let's wait and see. There's a million and one ways that a wave can retrace. So, but we just have to be patient. As I say, if you don't get the bottom, do not panic. Do not panic buy, because the odds are you'll get emotional if price goes against you. You'll probably put in a position size that's too large because you feel like you've been waiting so long for the move to develop. So be patient, be composed, and just use these markers. So this pitchfork is a marker of trend. When the trend gets broken, then it's confirmation to be bullish, and look what happened there. So this is the line, guys. This is the line to look out for. This could be, if it does play out, if it does act like a WXY, this line will be huge, because any breaking of that will mean that price is only going one way. Alright guys, I'm going to wrap it up there. Once again, thank you very much for the support, for subscribing, liking my videos. Really appreciate it, and as I say, motivates me to do more. Check out the newsletter if you're interested. It is nice in the sense that it's in printed form, so if you want, you can print it out and then take it away with you. You don't have to be sat at your computer all day learning about the markets. So yeah, that's another option. Alright, going to wrap it up there, guys. Hope you've enjoyed the content. Take care.